we were discussed about cost component structure. Okay, theoretically. Now we will try to create the same in the system. Okay. So SPRO, the transaction code is OKTZ, but we will go with the path. Product cost controlling, product cost planning, basic setting for material costing. Okay, let me go to the transaction code, then I will see. Okay, TZ. Okay. So these are the standard costing ones. We will create one costing, one cost component structure for our testing purpose. Just go to new entries. Z1. Okay. So this is our cost component structure. In this structure, we need to create the cost components. Okay, new entries. So cost component structure is Z1. This cost component, you can give anything like number, or whichever number you like it, like 10, 20, 30, 40, or maybe 100. You can start from 100, 101, or 110 like that. So let's start with 10 or maybe 1. Okay. We will take car as an example. Okay, let me open that Excel file. Okay, we will define the same cost component structure. Okay. This you can RM, raw material you can say. Talking about the number of cost components, right? The limitation. So this is the limitation here. Whether it is variable cost or fixed cost, we have to define here. So basically the raw material cost is variable. So we will select variable here. Okay, so raw material is variable, roll up cost component. And the most important thing is here, these two things we need to consider, like cost of goods sold and inventory valuation. Okay, so whether you would like to use this cost, right, as a cost of goods manufactured or cost of goods sold. Okay, you can define this cost as selling and administration cost. I mean, if you want to mark this as selling and administration cost, then it will not be part of your inventory. So if you mark it as cost of goods manufactured, then it will be part of your inventory valuation. Okay, right, while doing the standard cost estimation itself, apart from this manufacturing cost and all, you can also add selling and administration cost. But the selling and administration cost will not be part of your inventory valuation. So that's where, I mean, we have to decide whether you would like to see this cost as cost of goods manufactured or cost of goods sold, or else, again, whether you want to consider this particular cost for inventory valuation or not. Inventory valuation, variable cost. Not relevant means this particular component cost will not be part of your inventory valuation. Okay, these two things you have to keep in mind. Let's save. Yeah, this roll up cost component means, I mean, when you are doing the cost, cost calculation, right? You have multiple material. Okay, let's say you have a finished product. Let's say in the car itself, in the car example, we will take wheels is like raw material, I mean, individual components. For other one is like engine. Engine includes so many other components, right? So when you do costing for the car, what system does, it will also calculate the cost for, I mean, let's say engine is a semi-finished product. It has further raw materials and everything. Okay. So when you are doing cost of the car, it will calculate the cost for engine also in the back end, and it will roll up the cost of that engine and it will update to the car. It rolls up to the next level. So go to next. Z1. Here it is 2. Chassis. Okay, this is also variable. Next one, 3, Z1. This is engine. Next one. Oh, what we have. Correct. Okay, other external parts, variable cost. Variable cost. Next one is consumables. File. Okay, we have created all the raw materials. Now we will create next one. 6 machine cost. This is fixed and variable. Okay, I mean, machine is like fixed and variable as we discussed earlier. So I'm not changing anything. So by default, it's showing fixed and variable. Next one is personal cost or labor. You can say. Setup cost. Material overhead. Okay. 10. Production overhead. Okay. Production overhead is fixed. Okay. So now we have created 10 cost components. Here, cost component groups also there. For example, um, you want to see in the reporting, I mean, in the costing report, like, these are all like raw material cost, and this is manufacturing cost. Okay, fixed manufacturing cost, and this is indirect overheads. Like, let's say you have some additional components in real example. So you can create groups. Okay. So if you go to groups, cost component groups, for example, here they have, I mean, these are the standard groups like direct material, machine time, personal time, setup time, these are the groups. But let's say I will create few groups. Okay. Group RM, raw materials. Okay. And FM, this is nothing but fixed manufacturing cost, or else I will say as manufacturing cost. Okay. Let's not confuse. Okay. And OH also. Or else IO, I'll write as indirect overheads. Okay. Now, for all these, you can assign a group. This is raw material. This is also raw material. This is also raw material. This is for just a reporting. I mean, when you are executing your cost estimation, right? So it will disclose all the components in the same view. What is, I mean, in a nutshell, right? So what is my total raw material cost, what is manufacturing cost, and what is overheads. So in order to get all these kind of things, I mean, it will help us this cost component group. Okay, this is FM. This is also FM. This is FM. This IO. Okay. Clear, right? So we have created the cost components and we have created the groups also. So in this case, what happens when you run your costing for this particular product, it will give you two views. One is like the all components and also its grouping of the cost. Okay. Now, next step, for all these cost elements, I mean cost components, we need to link a GL account. Okay. For example, raw materials assign cost component. Okay. So we need GL accounts here. Okay. So what we have to do, before that, I need to create few GL accounts. FS00. What's the company called? Okay, under expenses, in this group, copy. Let's start with 20. Okay, raw material consumption. So what I will do for all these accounts, right? So, I will just create few accounts only, not for each and everything. Okay, we will see RM consumption. I will create raw material consumption, I would say, or else it's raw material consumption. Material accounts. Okay, so I have created one account like RM consumption. This one single account we can use for all the cost components. But I will try to create one more account as well. Okay, let's say what is this 21? I will create one account is for semi-finished product. One we will create for consumables. Okay. Okay. Now what we have done, we have account. Where it is? Okay, we have account here 20. Let's say engine is a semi-finished product. For this, we have created 21, and consumables we have 23. Okay, so for chassis and other externals, we are using same account. Okay, here, right? Now go to here, cost planning, define origin groups. So new entries, origin group, you can say 100 is wheels, 200 is chassis, and 300 is, let's say, others. Other Okay, this naming convention, origin group, right? It will allow, I think, 4 characteristics. You can give like wheels, what are the characteristic you like, you can give it, or else you can use a number. It's up to you. Or you can ask your business what origin group naming convention they need. Okay, so I have created 3 origin groups. Yeah, sorry, earlier I forgot to tell this. Here itself we have quantity structure component, define quantity component structure. Okay, now here we need to assign the GL accounts, new entries, cost component structure. Ours is Z1, wheels RM, right? Chart of accounts is IN10. Here we need to select the cost element. Where is raw material consumption? This one. So here origin group. So origin group, we need to select wheels, cost component, wheels RM. Okay. Now go to chassis, or else you can do one thing. Z1. Chassis. Okay, here from cost element. SFG. This is SFG, right? So 21. Okay, Z1. This one we have already assigned. Let's do one by one. It will be clear. New entries. This is chassis. For chassis, origin group 200, right? Let me check here. 200. Yeah. Now let's go to engine. New entries. Chart of account is same. For engine, we have a separate cost element, so we no need to enter. For engine, I'm considering as an SFG. Okay. Yeah, engine. So for one cost, one cost component structure, you can also assign multiple cost elements. Okay. For example, let's say, I mean, in raw materials, we have different kind of raw materials, and you have multiple JL accounts. Still, you want to see all those raw materials in one cost component also. That is also possible. I mean, if you are some 5-6 JL accounts are there, you have to enter 5 lines here. Okay. Now, engine is other external parts, entries. For this also we have same account. Here we need to enter the origin group. Next one, consumables. For consumables, we have a separate cost element. So we need to enter origin group. Not required. Okay, now machine cost. No entries. So here we need to assign the cost element which is belongs to 943. We discussed that. I mean, machine cost, the activity type related cost element you have to assign here. Okay. Then personal cost, no entries. Yeah, when I select this chart of accounts, it's taking a lot of time, it seems. Stay here. It's still running. Yeah, labor or personal cost. No setup. 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 No material overhead. So these two components, right at the moment, I mean, I'll keep blank because we have not created the cost elements yet. Okay, so we need two cost elements with category 41. Okay, those cost elements we will create later, and or else now create, we will assign, then we will discuss later. Where are the cost? Okay, FS00. This also we have to create under secondary cost elements. For example, I will copy this one. 940. Okay, so this is like material overhead. Okay. 942. This is production overhead. Okay, so this overhead, indirect overheads, the category is, sorry, I need to change the category. I forgot. Change. Here we need to enter the category as 41 for this account. I mean, for indirect overhead rates. This is 41. Okay, this also we need to change the category. 41. Okay. Now go here. For this, we need to assign this account. Lot of accounts are intent. Cost element here. Material overhead. Okay, so last one is production or this cost element here. Okay, so we have created cost component structure like wheels, chassis, engine, all other components, and we have assigned all the cost components to uh, yeah, we have assigned all the cost components. I mean, sorry, cost elements to all the cost components. Okay. Now we have to assign this cost component structure to our company code. Now assign elements. So if you see here, there is a masking here, plus, 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 all company codes. Okay. So we can also do the same thing. Okay. For example, copy this one, plus, 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 and also plus, plus, plus. But here, if you plus, plus, what happens? I mean, this particular cost component structure is, applicable for all the company codes in the system. So what I would do time being, I mean, in your production system or in your real product system, right? There you can assign this plus plus so that we no need to assign this step each and every time when you are creating a new company code. Okay. So it's the best way to mitigate this configuration to create every time, because in some of the projects we have 100 plus company codes, okay, phase by phase. So each and every time, let's say you have 40 company codes in one phase. In that case, you have to enter 40 times for like 40 lines. Okay. And if you forgot, I mean, we will not forget, but we have to enter multiple times. So it's better to anyway in our system we are going to delete all these standard configurations. We will keep only one with our cost component structure. So time being here, what I will do, I will assign the company code here, IN10 from 2024 or 2020. I will assign cost component Z1. Okay. So here another option is there. I told you yesterday, right? If you want to create one more cost component structure like this, okay, then you have to create one more cost component structure and you have to assign here for your company code. So that system will understand, okay, in my company code, I have two cost component structures. And again, I mean, these are linked together. Okay, now as of now, we are using only single cost component structure and I have assigned one cost component structure here. Okay. So now any questions? Once the cost component structure is created, okay, you have to activate. I mean, this is the important thing. Most of the times we will forget. So again, we have to do it. So again, I mean, when you're trying to change the cost component structure, it will ask you to, deactivate the structure. Then only it will allow you to change any changes. Generally, what happens after deactivating, we will do changes and we will forget. It's a general tendency. It happens quite often. So you should be very careful, especially when you are doing any changes related to the cost component structure. Sometimes without this activation, we will move the transport to, quality or some other system. There you cannot perform costing. You will get errors and all other goods movements also will stop. So you should be very mindful while doing any changes related to the cost component structure. Yeah. Now this is one of the, as I said earlier, it's the most important thing in product costing. Okay. Now we will move to next one, costing variant. Anybody know what do you mean by costing variant? and what is the significance of costing variant. So basically, costing variant, I mean, if you know already, I mean, some of the you might have used the transaction code CK11 or CK24 to calculate the cost of the product. Okay, so during that time you have to enter a costing variant. Okay, what this costing variant does? Costing variant is like a, it has several further components. Like, when you are doing standard cost estimation for raw materials, what price I need to check. Okay, for activities, what price, whether it is plan price, average price, okay, raw materials, fixed price, I mean, where moving average price or standard price, what price I need to select. Okay, and you have another components called, I mean, it has several sub components, and it's like, bridge between the front end and the back end configuration. When you are doing material cost estimate, simply you will enter the costing variant, so that it will check in the background all the parameters for the materials, whether BOM is available or not. Okay, if BOM is not there, what has to be done? Okay, sometimes multiple BOMs will be there. Which BOM we need to take into consideration? Okay, when I'm doing costing, which date I need to consider? Whether I need to do transfer cost from one plant to another plant, or I need to read costing from another plant or another material. Okay, likewise, we have so many components in the cost component. It will combine all these parameters and it will execute during the costing run. Okay, now let's go to the costing variant. SPRO. Controlling, product cost controlling, planning, define costing variant components. Okay, so before defining costing structure, it has so many components. Okay, like costing type, valuation variant, date control, quantity structure control, transfer control. Okay, so first and foremost important thing is define costing type. Okay, so 01 is the standard one. So we have to use 01. There is no other for costing variant. You cannot create your own. Okay, I mean, you can create, I will tell you that as well. So here, if you see here, what purpose we are going to use costing variant. Okay, so basically when you are doing material cost estimation for the same material, you can do different kind of cost estimations. Okay, let's say you can just create the cost estimation, you can see the price, just leave it, that's it. And another one is you can do the cost estimation for the product, and you have to update the price in the material master. That is the main function of the costing, standard costing. Okay, so for any particular product in-house, I mean the in-house manufacturing product, we will calculate the cost and we will update that cost in the material master for all the semi-finished products and finished products. Okay, in some cases we will also compare the standard cost estimation with market cost or something. So in that case, what happens? We will create two different costing variants. Okay, in that case, what happens? I mean, we will just create the standard cost estimation and we will not update in the material master for reporting purpose. Just we will create and calculate. Just leave it. So whether to update standard cost in the material master or not, that will be dealt with this costing type. Costing will help us to tell whether to update the standard cost or not. That is the functionality of costing type. And also we have legal valuation, group valuation, profit center valuation. For the same material, you can have three views, Like one is legal valuation, another one group profit center valuation. So if you want to have different prices for one material, okay, in the legal valuation you have 100 euros. Okay, in the group valuation 110 euros or maybe 90 euros, because legal valuation value will be different and group valuation value will be different when you are dealing with multiple company codes. Okay, because I mean the same material you will sell it to another plant, another company code of your organization. Okay, when you sell this product here 100 euros, when you are selling in the receiving plant end, you will have 110. I mean, you have to add some margin, right? But when it comes to group, at the group level, whether it is company code A or company code B, for me at the group level, I should have the same value, 100 euros only for the raw material cost. A sells that same material to B and it will add some margin, and because in A books they have to show it as a sale for the legal as per the legal local body governance rules and all. But at a group level, it's not a real sale for me. It's like an intercompany sale at the group level. When I see that is not a real profit for me at a group level. Okay. So in that case, what happens? For the same material, we will maintain two views, like legal value and group value. Okay, the group value will be different and legal value will be different. So this again we will discuss during material ledger, because this cost is related to the material ledger. Okay. So whether this costing variant are you going to use for legal valuation or group valuation, it also tells. It will tell, I mean, the costing variant will tells the system, okay, this you are using standard price update or no update. See, it has several options, whether you want to update the standard price or no update, or else commercial price, tax price. There are some other fields in the material master. You can select this one. Okay, it will update there. Okay, but this 01 is standard, and if you want to update the price of the material in the material master as a standard price, you have to select this. I mean, you cannot change anything, and even you cannot copy with this standard price and legal valuation. It will not allow you to copy and create another costing variant. I mean, costing type. Okay, save parameters with start of the period, okay. Means when you save that, I mean the price is applicable from the starting of the period. This is not required. So 01 we cannot create anything, just I mean we will use the same one. If you want to use, for example, here see 0L somebody has created legal valuation. Then see tax price legal valuation. Somebody created profit center valuation. Okay. Ledger as 5P. Ledger by B not allowed valuation. Center, okay. Legal plus ledger 0L. Okay. Now costing. Clear with the costing type? It will tell us whether to update the material master or not. Legal is like I told you, right? In the material master, you have legal valuation, legal view. Let's say, okay, XYZ, or maybe in Tata itself, okay, we have multiple company codes, right? Like Tata Steel, okay, TCS, Telecom, let's say, one more thing, or Tata Motors. Okay, so Tata is my group. Okay, so under Tata, I have three company codes. Let's assume, I mean, forget about these services because TCS is service industry and this is manufacturing and this is manufacturing. Okay. Let's assume time being all these three company codes are manufacturing company codes. I mean, they do manufacturing. Okay. Now let's say Tata Motors need some kind of raw materials from Tata Steel. I mean, they procure raw materials. Tata Motors procure raw materials. Let's say they have this Tata Steel, they manufacture chassis or something, let's assume. Okay. These guys will manufacture it, and these guys need this chassis to manufacture their car. Then what happens? Tata Steel will send this chassis. Let's say the chassis value is 1,000 euros. Okay. Here. Now, when Tata Motors receives it, for them, same chassis, it will be like 1,100 euros. Okay. This is legal. Let's say.
So 1100 means including freight charge, the other charges, right?
No, it's a pure revenue because the sale it's like sale, right? I mean,
okay,
this company is selling, say, I mean, the chassis to this company, Tata Motors.
Okay. So revenue.
Okay. Yeah. Or else, I mean, here itself, let's say, I mean, we will discuss about here only. Let's say here it is 1,100. This is legal. Okay, here we have one more value, group valuation for the same company code. First, we will discuss about, I mean, the Tata Steel itself, we have, let's say, have two values. Okay. In the group, what happens? The same chassis value will be like 1,000 euros. Okay. So when the stock moved from here to here, okay, this is also legal. Okay. Here, let's assume 1,200. But in the group here, 1,000. Okay, same material. When these two company codes are selling the product, they will add some margins and sell it to here, and they will report in their local, I mean, legal or zero, I mean, the legal reporting in their local books. They will do their valuation as per their local gaps. I mean, what price they procured, with that price, these guys will, inventorize this material. These guys will inventorize with 1,100. But being at a group level, I want to see my value. What is the original value? Okay. So for this guy, there is 100 margin is there when this guy is selling to here. Okay. But if I want to see my group level, at a group level, what is my inventory value? The stock moved from here to here, but still it's not an end customer. I mean, it's not end sale, right? If this, let's say, I mean, if the same component, let's forget about core for the time being. If the same component this guy sells to another end customer, then only it is the real sale for me at the Tata level, right? Till that time, there is no margin for me at the group level. Okay. So in order to eliminate this 100 margin, right? We have a concept called transfer pricing in SAP. Okay. That material ledger, I mean, we will discuss that later. So during with the help of transfer pricing, what we will do, system will eliminate. I mean, it will post in a separate accounting entry like transfer price. What is the intercompany margin? 100, it will post. And at the group valuation level, it will show 100. So that, I mean, when you do your consolidation inventory valuation, it will show you 100 only in the group books. Whereas in your local books, these values will be as per your local, I mean, local what stock you maintain and what value maintain. You can see, I mean, for the local reporting purpose, you can see the original values. But for the group consolidation, to eliminate the intercompany margins and everything, we will use this group valuation. And also you have profit center valuation. Okay. Now, next one is profit center. Okay. Let's say in the Tata Steel itself, I have two profit center 1 and profit center 2. Okay. Forget about this entity. In the steel itself, I have two profit centers. That means these two profit center could be two plants also, right? At plant level, probably we can create a profit center. Okay. I'm transferring stock from one plant to another plant, meaning one profit center to another profit center, right? It's a intra company, correct? Within the same company code, I'm moving stock from here to here. In some cases, I mean, in some organization, they want to see their profit at the profit center level, margins. Okay, because these are two independent units. I mean, two plants are there within the same company code. Generally, what happens? I mean, when we do stock transfer, right? I mean, one plant to another plant. Generally, I mean, if you're not, if you don't want to use marginal, I mean, this profit center margin and transfer pricing, generally there won't be any accounting entry. I mean, if you are aware, when you do transfer stock from one plant to another plant, generally we will switch off that accounting entry, because typically in my at the company code level, there is no, I mean, though from the logistics point of view, there is a stock movement from one plant to another plant. But in my accounting books, I don't require it. Whether the stock is available in plant 1 or plant 2, I don't mind. At the end, I need value only. How much stock I have at my company code level. Okay, stock value. So in that case, generally what happens, I mean, there will not be any accounting document for stock movements. But when the companies use profit center valuation, what happens when you do transfer the stock from here to here? Okay, this profit center will have, I mean, in the legal valuation, you have 1100 euros, right? Okay, in the profit center valuation, probably you will have 1150. Okay, so here also you will book a sale. You will add a margin, right? So that at profits, I mean, this profit center is sending, I mean, this plant is sending goods to this plant, and when the stock is transferred, they will add some margin and they will send it to another plant. Okay, in order to arrive this profit center level, yeah, we will use the profit center valuation. This is also possible with material ledger transfer pricing. So if you use the transfer pricing concept, there are two things. One is group valuation, profit center valuations are possible. These profit center valuation and group valuation are simply to eliminate the intercompany or intracompany margins at the group level. Okay, but again, I mean, it depends upon. It's again interlinked with your Fins ledger configuration. For profit center valuation, we need currency type. Group valuation, we need a separate currency type. Okay, all the setup we need to do, I will tell you, I mean, during the material ledger. Okay, at least in a high level overview, what are all the configuration steps and everything we need to do, I will show you. Okay. Now, next one is define valuation variant. Okay. There are standard variants, but these valuation variants you can create your own, or else you can use the standard one also. Let's create one. Copy the one with Z01. Okay. So what is valuation variant? So valuation variant, it has again for the different tabs. I told you earlier also. This valuation variant will let you know the system to pick the price for material. If you see the first tab is related to material, second tab is related to activity types, third tab is related to subcontracting. We'll discuss what is subcontracting, external processing, overheads. Okay. Now let's talk about material. In this tab, see, while doing the standard cost estimation, let's say, okay, these are raw materials, right? Let's say, so FZ100 is the, let's say it's a car. The material code is FZ100. Its name is car. Let's say assume. So it has these many components. Okay. Now when you are doing standard cost estimation for wheels, let's say it's raw material, right? For that material, what price I need to take during the calculation? So the option is price from purchase info record. Okay, or else valuation price according to price control in the material master, standard price, moving average price, and also there are several options are there. Which price I need to take while doing the standard cost estimation for the prince product for the raw material. Okay, so system will check as per these priorities. First, it will go, and in this case, I mean, here the first option is price from purchase info record, because why this option is available for all the raw materials. Generally, info records will be there, right? I mean, at what price we are going to buy that material. I mean, the procurement team will create info records for each and every raw material. And again, I mean, directly in the raw material, we can maintain the price and we can directly take the raw material price from the raw material. Or else, in some cases, they will maintain info records also. If it is a new material, I mean, it's not an existing material, they're going to purchase a new material. In that case, they will have, you know, some kind of agreements with the vendors, and they will maintain the info record price, right? As per because I mean the info records are required for purchase orders also, for creating purchase orders to get the price. They read the, I mean, they use info records basically. So directly system will go to the info record and it will check whether price is there or not. If info record is there or not, if it is there, it will check the price and it will take the price and it will calculate the price and it will give to its finished product. Let's say in this case info record is not available, then need to go to the next priority. Next priority is valuation price according to price control in the material master. So in the material master you have two kind of price controls. One is moving average price, another one is standard price. Price control V and S we will discuss later. Okay, so if it is V, it will take the moving average price. If it is S, it will take the standard price. But if you select this option, these options are meaningless actually, because here itself we are giving indication to the system valuation price according to price control in the material master. So it tells itself tells you, okay, if it is V, take moving average price. If the price control is S, take standard price. So to be honest, I mean, if you select this option, then you no need to keep these two options. Okay, then probably you can say plan price 1, plan price 3, or any other price. Okay, If you select again info record here, it will here also you need to whether it's a gross quotation price, net quotation price, or any other condition table price or something. Also, you have to tell, because these are these sub strategies are relevant to info record. Okay, if you don't select info record, this will be disappear. Okay. When I select this one, you will get here net quotation price, gross quotation price, whatever it may be. Clear? The valuation variant, the significance of valuation variant is to take price of raw material or activity type, which price needs to be taken. I mean, it has the sequence of priorities. Okay. If system couldn't find anything as per this criteria, then it will give you error message. There is no valid price available for this material. So second tab is activity types. Now we discussed about activity types, right? So for activity types also, here, I mean, we don't have much options like plan price for the period or else actual price of the previous period. So, some options are there, but generally I will suggest go for plan price for the period, so that it will be easy for for the business and for us also during the calculation. Okay, so simply it will go to the period. Let's say you are doing standard cost estimation in the month of May, then it will go to May month. It will check for that activity type, what price is there. Let's say 10 euros are there, it will pick the 10 euros and it will update. If there is no price in the month of May, then it will give you error message. Okay, it's simple. Next, subcontracting. So it meaning you are a main manufacturer, right? Let's say you have an urgent delivery. I mean, or else you have to deliver that product in a short time, and you don't have capacity to do that. Okay, or else you don't have that particular component. You cannot manufacture in your plant. Okay, or else you have all the resources. Okay, but you will hire a subcontractor. I mean, who do that particular piece of work, and he will deliver to you. In that case, also, what price we need to consider for subcontracting materials? There is a special procurement type is there, like 30 is a subcontracting material. So we have to select 30 in the material master. So system will understand, okay, this is a subcontracting material. So when we say subcontracting, different scenarios are there. Simply they will perform their service and they go, or else you will give all the raw materials and everything to him, and he will deliver it to a finished product. Okay, it depends. Whatever it may be, that subcontracting material will have separate material type. I mean, separate special procurement key. Based on that, system will understand, okay, this material is subcontracting. In that case also, system will expect a purchase info record for subcontracting price. So it will take a price from that subcontracting info record and it will update the price. Okay, here also we have net quotation, gross quotation. Same like info record options, it's available. So external processing. Okay, this is like, uh, external processing is like again a manufacturing activity, same like a subcontracting, but it's not subcontracting. Okay, this external processing, I mean, PP guys will create some kind of master data, okay, for external operations. Let's say in a car manufacturing, right? Let's say in the car manufacturing itself, you perform everything, okay. The final car is and everything is there, okay. Let's say testing, you have given, I mean, the testing part at the end, I mean, the testing or quality check, you have given to some external vendor, certified quality, I mean, certified vendor or someone, I mean, who provides their services. Okay, those kind of things. I mean, what price we need to use. This is external processing and overheads. Just now we discussed it, right? The material overhead and production overhead. This overheads, what we have to do, we have to create a costing sheet that we will discuss later. I mean, we will create a costing sheet. That costing sheet we have to assign here. So that system will understand, okay, we have to use this costing sheet. In the costing sheet, we'll maintain the rates like 10%, 5%, 6%, whatever it may be. So as per this costing sheet, system will uh, calculate the cost of the material. Okay, as of now, we don't have any costing sheet. Later, we will come here and we will assign. So time being, let's keep it blank. So this is for material, this is for activity types, subcontracting, and external processing. Okay. As per the strategy, system will identify the price. If the price is not available, then it will give you the error message. So all your costing issues will link with this valuation variant. Whenever there is an issue, then you have to come to this part and you have to check, okay, what strategies are there? As per this strategy, price is there or not. If the price is not there, then they have to maintain the price. Okay, don't change the costing variant. Sorry, valuation variant. Clear to everybody or any further questions? It's very important. Thank you. Okay. Now, next one is define date control. Okay, the date control and all, generally we can use the standard ones. But if you still want, you can create ZC1, ZCG, ZP01, something like that. But yeah, generally we can use the standard one. But what date control tells, when you are doing the cost estimation, right? What dates it should propose. Okay, when you enter the CK11 and transaction code here, for example, okay, you enter the material, you enter the plant, then you will enter the costing variant. Once you enter all these parameters, next tab is dates. Here, costing date from and costing date to. Okay, so how these dates will get filled automatically. So in this configuration, you will say, okay, cost start of the next month. So let's say you are doing standard cost estimation today, then system will automatically propose the dates here from 160, 2024. So starting of the next month, costing date 2. So costing date 2, maximum value. Maximum value means 31st 12 9999. That is the maximum value it will propose. Again, quantity structure date, valuation date. Here, quantity structure date, valuation date. These dates are belongs to a BOM and routing. Okay. What date? Let's say, you entered here like 06 2024. Here also 01 06 2024. On that day, whether BOM and routing are available or not. If there is no BOM and routing available with that date for this particular material in this plan, then it will give you error message. So all these dates will be determined with the date control. Okay. If you want, you can create your own costing, the date control, or else we can use the standard one. Okay, let's create one. Okay, ZPC1 I will create. ZP. Generally, we can use the standard one. There is no need to use the defined, but let's use it because this system will be used by many others, right? So what I will do, instead of next month, I will keep current date. So right? Why system will propose start of the next month means for the next month we do costing before in advance, because as per the month end process we will start doing. If you are following cost estimations every month, then generally people in the business controllers, they start doing standard cost estimation from 25th of this month. Okay, till 30th first night they will run all the costing runs and they will clear all the errors. Once everything is green, then they will schedule a job at the midnight, 31st May midnight, and once it 12 o'clock, 12 o'clock in the midnight, the cost will be released for the next period. So for that reason, they will keep this start of the next month. Okay. If you keep current means it will calculate the cost estimation from current date. Okay. So in real time, generally it will be like start of next month only. If you want, you can still keep current month. But when you, I will tell you, what problems you will get if you see the start of the next month. But let's keep it start of the next month for now. Okay. The date control is like it will tell us, what date, what is the start date, what is the end date for the cost estimation. Okay, that's it. It's nothing more here. Next one is quantity structure control. This also you can use the standard one. Here we cannot do. Nothing to do here. For example, BOM. Okay, PC01 costing BOM. Whether BOM is available or not, it will check. If it is available, it will take the BOM. This is standard. Routing. Okay. This is also standard one. It will check some combinations. When you create routing master, with these combinations, routing will get created, and the system will check whether the routing is available or not. Then it will check here. Generally we will not do anything. It's completely production related stuff. The manufacturing guys. So here we will not do it. Simply we use the standard one, PC01. If you see, it is very blank. No one has created nothing. Next one's transfer control. Here also we can use the standard one, or else if you want, you can use your own. Okay. So single plant, cross plant. So this one I'm just talking about, right? Clause when you transfer the material from one plant to another plant. Okay. Whether what price you want to, you can, let's say, you have manufacturing plant and you have selling plant. Okay. Generally we do costing in the manufacturing plant, whereas in the selling plant we will not perform any costing run. Okay. What selling plant will do, it will just read the cost estimation from the material manufacturing plant, and it will use the same material, same cost estimation from, what is there in the manufacturing, the same cost estimation will be used in the selling plant as well. Otherwise, what happens if you, let's say, you have a car, right? You have produced in plant one, but the same plant cannot sell the products, right? So you will have a dealer or somewhere, or maybe you have some warehouse. From there, the real sale will happen. Okay, when the product is manufactured, it will ship to another plant or maybe another warehouse. But technically, that they will create as a plant in the system. That is nothing but a selling plant. From there, it will go to the dealer. From dealer to the end customer. Okay. So when the selling plant deliver the stock to customer, right? That time system has to post COGS split. The detailed breakup of the cost it has to post, right? So for that purpose, what system does, it reads the cost estimation from the manufacturing plant and it uses the same BOM recipe which are there in the manufacturing plant. But there will be a special procurement key for those in the receiving plant. Based on that, system will calculate the cost and it will read the cost from the selling plant and it will update in the material master. So future price, current standard price, previous cost standard price. What price is available, that you can do it. Here also, generally we don't do anything. We can use the standard one. Okay. If it is single plant transfer, no, same material, single plant, not required, right? So no transfer, nothing is there. It will just calculate. Okay. This is also not required. Now, These are the components. Now go to the define costing variants. Okay. Oh my God, somebody deleted. Okay, we are there. PPC1, PPC2. So PPC1 is the standard cost system costing variant. Okay. We have to copy this one. Okay. I will make it as ZPC1. ZPC1. Okay. Now go here. So this we no need to change, but valuation variant we created as ZC1, right? Or Z01. Yeah. And date control also we have created ZPC1. Quantity structure control and all we have not created. So I changed these two because I have created my own. So nothing is required. Save it. Next one is quantity structure tab. Okay. Here there are some checkboxes are there. Ignore product cost estimate without quantity structure. If you select this checkbox, what happens? If a particular material doesn't have any BOM or routing, then it will ignore. It will not do costing for that material. Okay. So ignore product cost estimation without quantity structure. So don't select this one. If you select this one, what happens? Let's say if you have not created a BOM or routing for any material, system will not consider those material for costing. Then what happens? There won't be any costing for that material. So let the system calculate the cost. If system doesn't find anything, then it will give you an error message so that you can inform to the production people this particular product doesn't have any BOM or routing. Please create it if needed, or else maintain a price, or else change the procurement key. Okay. Transfer control can be changed. If you are using transfer control during standard cost estimation, you can change this transfer control and you can enter manual. This is not required. And transfer active standard cost estimation if material costed with errors. This also don't select. If you select, I mean, when you are creating standard cost estimation, let's say we have 5 components are there. For one component, there is an error. 4 other components are no errors. In that case, also, if you want to transfer this cost estimation, you can select this checkbox. But generally, we will not do this because all the components should have proper price so that you will get the correct price in the finished product. Okay. This is additive cost. This we will discuss later. Additive cost. What is additive cost and all. Update. So while doing the standard cost estimation, okay, saving, sellout, default parameters, save, error log, itemization. So all the parameters, all the, I mean, these details are required for further analysis. So for that purpose, I mean, we need all these checkboxes. Okay. We no need to do any change. Assignments. So again, this for this costing variant, cost component structure will be there already. I mean, we have assigned, right? See, oh, this is company code. Ours is not assigned. Yeah, just now we have created, right? So we can assign this. So here, all the, I mean, assigned cost component structures will be there in this costing variant. Version also will be there. Okay. These are all like standard. I mean, by default got assigned when you create. Generally, costing version 1, we will use it for costing. So it's also there. Cost component split in controlling area currency. Okay. So generally, this step we will do it when you have multiple company codes and you are controlling area currency and company code currencies are different. This we will do it. Okay, just we have to go to that particular step. Okay, and assign your company code here. Okay, for example, IN10 assign costing type. So we have completed cost component structure, costing variant. As of now, we are discussing only product cost planning part. Okay, we are not talking about anything on the actuals. Here, cost of that controlling is there, but we are not discussing that now. Just we are discussing only planning part. Okay. Now, next one is overheads. Okay. Define costing sheet. Yeah. This also costing sheet also it has several components. Okay, we have to do that. First one is base. Define base. Oh, so what do you mean by base? So let's say when you are creating, when you are calculating the material cost estimation, right? For you are saying material overhead. So material overhead on what accounts? On what basis you have to calculate the overhead? So for the materials, we will have some GL accounts. Okay, we will mention all the GL accounts in the base. So whenever there is a cost in those accounts, system will consider those accounts as a base. For example, here, if you see here, there are already some standard ones are there. Base material. So from cost element and two cost elements. So here we need to assign all the consumption accounts related to the material. So we have assigned some cost elements in the cost component structure, right? So those accounts we have to assign here, or else you can create a group, you can assign here. Okay. We will create our own things here. For example, ZMAT. ZMAT. Okay, material overhead. Another one, ZPRD. Production overhead. Okay. Now for this material, we need to assign the GL accounts. So new entries. So we need to assign the raw material, these accounts, all the raw material consumption accounts. Okay. Or else you can create a group like material overhead. You can assign all the accounts in that group. Anything is fine. Okay. Now jet production. Entries. Here, production overhead on what cost you have to consider. Okay. So basically we will use these accounts like 43, 40. These accounts you can consider here. But this you have to discuss with business, okay? Whether, I mean, when they are going for overheads, okay, what are all the costs I need to consider in the manufacture? Let's say production overhead also sometimes they will not use all the accounts. They use out of this. Let's say don't use the setup cost. Only calculate production overhead on the machine cost. They may say like that only, like that also. So we have to discuss with the business for base. I mean, for production overhead. I mean, first of all, what are the overhead types you are going to use? Okay, if you are using these, let's say material overhead and production overhead. So what is the base for material overheads? So do we need to consider all the materials or do we need to consider specific set of materials? Right? So accordingly, you have to create the base. Okay, I have created two base. One is ZMAT and ZPRD. Second one, percentage overhead rates, quantity based overhead rates. Now the next challenge thing is like we have two kind of overheads. Okay, one is rate based. For example, here in this case, my total, this all raw material cost, let's assume 5,000 euros. Okay, this is price. Okay, I will say this is 5,000. Let's say, I mean, this all value is 5,000 euros. Okay, calculate my material overhead is like 10% on the raw material cost. Then what happens? 5,000. So 500 is my overhead, right? I'm calculating 10%, then 500 is my overhead. This is percentage based overhead. Another one is quantity based overhead. Okay, how it works? Let's say my raw material quantity is, I mean, wheels we are using 4, right? Here 1, here 1. Let's say other external parts, something you can use because its unit of measure also matters. Here it is PC, here it is PC, here it is PC. Other external parts like kg or PC, whatever it may be, let's say it's also 1 PC or maybe 10 PC. Okay, consumables basically they'll measure in kilograms or something. So just 1 kilogram or 2 kilograms, something like that. So now what system does? In this case, what happens? It's quantity based overhead calculation is a bit complicated when compared to percentage based overhead, because percentage overhead, it will just simply take the price of these all materials and it will apply the percentage. Whereas when the quantity based overhead is when comes, then you have to tell the system, okay, you have to maintain the rate 1 PC for 1 piece 5 euro. Okay, let's assume 1 piece 5 euro. Okay, here it is PC, PC, PC. Here it is kg. So what happens? So system, what it consider? These all pieces it will consider. Here how many pieces? 6 are there. 6 multiply 5. Okay. 30. I mean, in order to match this, we will increase this rate. Let's say some 100 or maybe 100. Let's keep 100. So 6 multiply 100, 600 it will calculate. But for this material you have kg. Okay. Then again you have to maintain, unit of conversion like pc to kg. Then it will also convert 1 kg is equal to maybe 2 PC or maybe 3 PC. right? Based on that, it will calculate the value. But here it will sometimes it will create problems also if the unit of measure is not same in a particular BOM. If the unit of measure not same, in that case you cannot use the quantity. I mean, you can use, but what happens? I mean, for kg you have to maintain one rate. Per piece we have to maintain one rate, or else sometimes unit of measure is you need to maintain one piece. But some cases also, like, you cannot convert the unit of measure simply to kg to pc, right? Because the wheel is the kind of material is different, and the consumables, the kind of materials are different. You cannot simply, kg pc conversion you cannot do. So these kind of things will happen. But in some, like, in car manufacturing, maybe it may not be possible. But let's say chemical or pharmaceutical companies, right? So all will be like kilograms or grams, right? Or milligrams. So in that case, it's very easy. Pieces will be there. I don't say it's not there, but there the conversion will be very easy, because let's say in one tablet sheet you have 10 tablets. Okay, let's say if that whole tablet is a PC, but you can weight the measure of all those tablets, like each tablet 5 milligram, right? Some 100 mg, it will come like that. So there it's very easy to convert the milligram to pieces. But in the manufacturing like car, it's very difficult because it uses different kind of parts, right? So probably it will not, the quantity based overheads will not work in the car manufacturing, or for that matter, even some of the other manufacturing like steel, etc. It may not be possible if their, product dimensions or base unit of measures are different unit of measures. If they go with the different unit of measures, then it's a bit difficult. Otherwise, you can use quantity based overheads. But the simple one is like percentage. It simply take the value and it will update. Clear for everybody? And these are like input quantity only it will consider, because in the BOM you will maintain, right? Those quantities only it will consider. When you say, now this quantity based overhead is available, again business will ask, can you calculate this on the output quantity? I don't want to calculate my overhead based on these inputs. I want to calculate the overhead based on the output. I produce one car, some rate. Something like that they ask, but it is not possible in SAP. You cannot calculate overheads on the output quantity. You can calculate only input quantity, but still SAP has given one user exit. By using the user exit, you can create overheads on this uh, output quantity also, but it has a lot of work and it is a bit complicated as well. Okay, try to avoid if somebody asks, okay, create overhead on the output quantity, simply straight away say no, it's not possible. Though we have an enhancement. You can do through an enhancement, but it's very challenging, I would say, because we used it and we struggled a lot, and still we are struggling. So now we will go with percentage overhead rates. Okay. So easy understanding. Then you later probably, if you have time, and you can create your own costing sheet with quantity based rates and try with different permutations and combinations. And if you face any errors or if you need some information, let me know. I can tell you how to do it. So now define percentage rates. Okay, let's create new rates. Overhead rate, material overhead. I will create here also same name, ZMAT. Okay, material overhead. Now here is the case, dependency. Okay, here certain options are there. If you see here, overhead type, overhead key, overhead type, plant, company code, business area, order type, blah blah blah. Okay, So what it means? Let's say you are maintaining 10% overhead rate. Okay, you want to maintain that 10% for each and every material, or based on, I mean, plant. Let's say you have 10 plants in the company code. For the same, all the 10 plants, you would like to have the same rate, or you would like to maintain different rate for each plant. Okay, or else, I mean, if you want to maintain a rate at a company code level, okay, that also possible. And here, plant is there, company code is there, overhead key is there. Okay, if you select this overhead key, then it will give you, like, let's say you have 5 kind of materials are there. Okay, so 5 different material types are there. For example, in our example only, we have 5 kind of materials are there, right? So if they want to maintain separate rate for each kind of material, for example, on the wheels calculate 5%, chassis calculate 2%, engine calculate 3%, externals calculate 1%, consumables calculate 0.5%. So if business asks to maintain, I mean, they ask us to create like that, then what we have to do? We have to define the dependency at overhead key level. Then we have to create a overhead key, and this key you have to link it to the material master. So accordingly, system will calculate the rates. But this will be complicated one, because creating a key and assigning here, it's not a problem. But again, you have to maintain that in the material master, right? That is headache for the materials management. We need to tell them, okay, we need to tell them the rule, like if the material type, or we have to tell them, right? I mean, we need to take a unique characteristic from the material. If that is so and so, then maintain overhead key something. I mean, we need to give some mapping rule to migrate their materials. So, but again, it's if the business really needs it, then we have to use it. Otherwise, I mean, no, you can go simply with the plant option. So it is the easiest option. So at plant level, we can maintain an entry already exist. Okay. Okay. ZM1. ZM1, I will do it. Okay. So in this case, I selected material, I mean, overhead type at plant, meaning I can assign different rates for different plants. So my overhead rates are at plant level. Okay. If you want each material level, also you can maintain, but it's very headache. I mean, the maintaining rates of material, then your costing sheet will be like 1,000 or maybe 3,000 lines. So it's very difficult to maintain that. Generally, people doesn't maintain overhead rate for each material weight. So they will try at least plant level, or some cases they may also ask you to, like I said, right? I mean, material group or something, a product group, something. On that level, they ask you to maintain. So in that case, you have to use the overhead key. Okay, time being, select the plant. So here in this case, we can maintain separate rate for plant. Go here, go to details. But do we have a plant? Let me check in our company code. This is 16 T001K. Company code IN10. Okay, there is no plant here. So we also need to create a plant. Okay, let's create a plant first, otherwise it will not allow. For example, valid from and valid to, let's say 110/2024, and till the year end, I would like to maintain the same rate, or else monthly also you can maintain rates. Okay, overhead type. You have actual overhead, plan overhead, Let's select one. It's 2 plant, I don't know, but 10% maintain, invalidate. Okay. So it's asking to enter a plant. Okay. Now we need to create a plant. Okay. Enterprise structure, definition, logistics general, define plant. I will copy, delete, check plant. Copy from plant. We have anything. Okay, let's copy this one. Although front, I will make IN10 as the plant. Copy. Okay. We want two transport number ranges. Okay. Where is this one? Yeah, still it is copying. We are defining the overhead rates, right? We have created what? Oh, it's not created. Okay. ZM1, material overhead 10. Next one is ZP1, production overhead. This is also D20. Now we have to enter the rates here. Entries valid from valid 2 controlling area, valid 2 plant IN10. Okay, 10% I'm giving. Okay, so here we maintain 1, and also for actual costing also we need to maintain overhead rate. Okay, so this 2 is for plan costing and 1 is for actual costing. I mean, during the production order confirmation overhead month and close, that time it will use this rate, but during standard cost estimation it will take the same rate. But generally we will maintain same rate for 1 and 2, but you have to maintain 2 rates. 1 is for planning and 1 is for actuals. Okay, for this also you have to do the same thing. New entries, valid from, valid from, valid to. Okay, controlling area. 1, 2. Let's use 5%. Okay, so we have created base, we have created percentage overhead rates, and we have already cost elements also there. Okay, next we have to define credits. Okay, entries Z01. This is material overhead. Z02, production overhead. Okay, so why credits are required? So when you are calculating overhead, right, this overhead has to, especially, I mean, when you are applying overhead, it will debit the production order, and we need a subsequent credit also. So it will credit to the cost center. So we need to enter the cost center. I mean, under which cost center and which cost element that overhead needs to be credited, right? So we have already created 2 cost elements, and we have credited. Already we have some production cost centers, so we can use that as well now. Details. Again, I will tell you during the actuals. I mean, when we are doing the standard cost estimation, why, I mean, from where the cost center is coming, where cost element is coming. Again, I will come to this configuration and I'll explain you. But simply credit means for which cost center you want to credit the overheads. 31st to all. This use the maximum, and cost element you have to use. Material overhead, we have created 1 cost element. Here it is like keep star. And which cost center you would like to credit. Let's say production 1. So when you calculate the overhead with this cost element, it will get credited to this cost center. Okay, that is what credit. This one. New entries valid to cost element, production overhead. Now we have created all the cost centers. I mean, we have created the base, we have created the percentage, and we have also created the credits. Then again, we need to assign all these things in the costing sheet. Okay.